Welcome back, friends. Today we'll be discussing an interesting concept. This is a concept of working capital. Now, if you want to understand fund flow statement and cash flow statement with greater clarity, you need to first have good understanding of working capital. To understand working capital, we will be using an example of our own student company's own cafe. This cafe is called StuC CAFE. It's a newly opened cafe, and we will see how the business is going on in this cafe. And with this example, we will understand the deeper concepts of working capital. So let's start. Now Stu-C has started a new business. This is a cafe. This is the students' company's cafe, and it is got a great space. It's by the river. There is a river flowing, and on the banks of the river, you have this Stu-C cafe. Stu-C cafe. It has got great menu, and there are a lot of college students visiting this cafe. There are many colleges nearby. There are many banks and other industrial establishments nearby who give Stu-C cafe bulk orders. So his sales are good. The business is going good. Let's see what happens next. StuC has invested 10 lakh rupees by the founder, and he has rented the cafe space. He has bought furniture and kitchen equipments. He has stocked up raw materials and ingredients like coffee beans, milk, sugar, snacks, etc. Now, at first, everything seemed fine. Customers loved his coffee, sales were increasing, and he was having a good time. Now, 2 months later, StuC started noticing some problems in his business. Basically, the sales were there, but he was still struggling to pay salaries and buy new stock. Now, luckily, to analyze this problem, Stu's wife was a chartered accountant. She was a finance expert. She visited the cafe, had a look at the sales, had a look at the consumer behavior and all the operations. So she noticed that the sales were good, customers were happy, but still he had no cash to run day-to-day operations. Now she had some important questions to ask Stussy. So she started that how do you buy your ingredients? So Stussy replied that I buy most of my ingredients on credit and I get a 30-day time period from suppliers to pay the money for those ingredients. So he gets raw materials from his supplier and he doesn't have to pay immediately, but he gets a period of 30 days to pay it back, pay the money for his orders. And the next question was, when do customers pay you? So he said that they are mostly online, but his main business comes from bulk orders from the offices we mentioned, the banks and other establishments nearby. And these bulk orders, they make payment only after 45 days. So now she smiled and said, "That's exactly your problem, Stussy. You really have a working capital issue." Now let's understand what is this issue. Now she explained him that working capital is basically your current assets minus current liabilities. Now it shows the money Stussy has for day-to-day operations. So for running the company, running his cafes, Stussy has to manage his day-to-day expenses. For that, he needs working capital. Now, Stussy had stocks, he had current assets, but still he couldn't use it to pay salaries. And his cafe gave credit to his office clients, meaning that they were giving them services. Susi was giving them services, but were not getting payments in return immediately. So the money was kind of stuck, and that is what we call account receivables. His receivables were really high, and he also had to pay rent, salaries, and suppliers before collecting payments from bulk orders. So remember, the bulk orders would be paid back after 45 days, but on a monthly basis, after every 30 days, he had to pay rent, he had to pay salaries, and suppliers are also given him a time of 30 days to pay them their dues. So now clearly there was a mismatch, and he had a cash flow gap. Now, his wife suggested some simple ways to fix the problem. First was to negotiate better credit terms with the suppliers. So she told him, you ask for 45 days credit instead of current 30 days. So he will get another 15 days to pay them back, and encourage customers and his clients to make early payments. So instead of giving them 45 days for the big clients, he could ask them to pay back in 25 days, and keep only necessary stock. Don't unnecessarily pile up your raw materials and stock. Reduce excess inventory and order items just in time. So just look at the sales and your day-to-day needs and accordingly stock items. Don't waste money on just creating large inventory. So these were some quick fix problems that she, suggestions to his problems that she gave him. Now, what are the lessons learned from this example? That Stussy made these changes, and within a month, his cafe was back on track. He had enough cash to run daily operations smoothly. So, what is the moral of the story? The moral of the story is that sales don't guarantee business success. Managing working capital is the key to keeping operations smooth. And finally, cash flow is the lifeline of a business. So, as you see, he had to renegotiate his payment terms with both clients and suppliers. Clients and suppliers, he had to renegotiate his terms. He had to clearly understand how to keep inventory, how much inventory to be maintained on a day-to-day basis. So these are important concepts of the working capital, and if you understand this well, only then you can run your business operation smoothly. So not just focusing on sales, to get that sales and realize cash from it, working capital is the key concept. Now, Stu-C made three mistakes in managing his working capital. What were they? First was mismatch in payment cycle. We discussed that. Then there was poor credit management. Gave credit to bulk buyers without ensuring he had enough cash to cover daily expenses. So he did not think about running his, paying his bills, rent, and salaries. Before thinking about that, he extended bulk buyers 45 days period for payment, and he always used excess inventory, stocked up unnecessary ingredients without considering how much time he could sell them. So this all is led to funds locking up. Now, how did working capital affect his business? It created cash flow issues. Sales were strong, but he didn't have cash. Delayed operations. So he'd struggle to buy new ingredients on time, affecting customer service. And finally, financial stress. He always worried about money despite running a successful cafe. Now, there are some examples from real businesses facing similar issues. You could see Jet Airways had a similar problem in 2019. They had strong revenue, but they struggled to pay fuel suppliers and employee salary. This is again due to a working capital crisis. Similarly, Kingfisher Airlines, they had a luxury brand, but they still failed to manage cash flow and working capital. Ultimately, they had to shut down. And this is commonly also noticed in retail stores and startups, where despite having initial sales and all, within a few months they struggle to maintain that cash flow. So even if the business is profitable, it can fail eventually if they don't working manage their working capital well. This is the moral of the story. Now, looking at some key components of this operating cycle of a business, we know operating cycle involves first you need cash, and then with that cash you buy raw materials from suppliers, and then you get a term to pay it back. You get some time. Then within that time you do process those raw materials, make semi-finished goods, then finished goods, and then finally sell it in the market. Sometimes you get sales as account receivables. You don't get the money again. They negotiate a time period with you. They tell you that we'll pay you back in 45 days in the example of StuC. And when after 45 days the cash is realized, so it's basically a cash to cash cycle. That is the working capital cycle. It's a cash to cash cycle, and if there is problem in any of these stages, then your working capital is stuck. That cash to cash conversion is not happening. So it includes buying, managing, and paying for inventory, then converting inventory into goods for sales, and selling goods and collecting payments from customers. Only then the cycle would be complete. Now let's understand some important terms. These are gross working capital. The first term is gross working capital. It's basically used to when talk about current assets. Total current assets is mentioned as gross working capital. This is aggregate of raw material, semi-finished goods, trade receivables, cash in hand, and bank balance, etc. So this is the amount of working capital required by the business to achieve its sales targets. Sales, how will they achieve the sales target? By selling the items and getting cash. So that source of all that is the gross working capital, the total current assets. Similarly, current liabilities you already know. These are short-term bank borrowings like cash credit, CC, OD, and other loans payable within a period of 12 months. Then within the liabilities you have trade payables, sundry creditors, expenses such as salary, taxes, and other accrued items. So these are the source of funds, and this is using these funds we get the current assets. So these are the use of funds. Now, what is net working capital? The difference between the current assets and current liability is called net working capital.